thank you all for coming this morning. I know it's hard to drag yourself out of bed, especially when you're out till 3:30 in the morning. But thank you. As Rachel said, today's about future focus on this industry. I mean, we've had, I said it yesterday on the last panel, we genuinely, there's a lot of negativity in the trade press about our industry, which I find is a little bit not accurate, because there's a lot of interesting companies in ad tech and martech who are doing phenomenal things. And this interview today is to talk to Jeff, who's leading one of the sort of like the poster child of the industry, I would call it, like an ad tech company that has built a profitable business, has gone public. And Jeff has been very good about advice to other companies looking to IPO. I believe you had a little sort of confab just before they went public to advise companies how to go public. And the Trade Desk is a perfect example of a company that has built a profitable a business and has certainly got lots of longevity. So today's interviews is about the Trade Desk and Jeff, and about the industry as a whole, because like, there's no man in the industry who make you feel better about this ad tech thing than Jeff Green. He just puts a smile on your face and goes, "Yeah, I feel good about myself today. Thank you, Jeff." And I almost said me and Jeff should do like a podcast just cheering up ad tech.
I'd love to.
Get the fuck over it, you know. Anyway, so Jeff, you're in a sort of an interesting sort of spot right now. You've just moved to Hong Kong, right? And I'm curious as to why. Because the Trade Desk is placing a massive bet on Asia as a region. So I just wanted to get an idea of why you've moved there. Because that's a lot of rambling intro there, by the way. So, but I'm just curious why you're in Hong Kong.
Yeah. So as you've said before, I've always taken I always played the long game. This is a big picture for me. Global advertising is a $700 billion industry. It'll be $1 trillion in less than 10 years. That is massive by any standards. As you're approaching $1 trillion industry, in general, and this is the way I think about it, advertising grows at roughly double the pace of GDP. So if you're scanning the world, saying, how is that $700 billion divided up today, and how is it going to be divided up 10 years from now? You are going to invest in the places where GDP growth is the fastest. If you look at a place like China, currently 12% of the population is middle class. By 2030, 70% is predicted by economists to be middle class. That is the fastest growing middle class in the history of capitalism. If you are a global company, like we are, we're not a US company, we're a global company that happens to be based in the United States, you can't ignore China. You can't ignore GDP growth in places like Vietnam and Indonesia. If you look at it from today's perspective, you'll say Indonesia is the 17th largest media market in the world. If you look at it from 2025's perspective, you'll say it's top 10. You have to be there. That's why we're there.
That's a very good answer. So just moving on from that, we have had like the worst kept secret in ad tech, which is basically AT&T buying AppNexus, which I said yes on the stage the deal was done. I say a lot of predictions, and eventually you're right on one of them. So they've gone for like $2 billion allegedly. Brian and Michael Rubenstein are very happy, by the way. I've WhatsApped Brian last night. He was delighted with the whole thing. But what does that mean for our industry? Because this is sort of me and you talking about where ad tech goes as a business, right? Because I've always said that like ad tech is sort of like the muscle in media, right? It makes it work. It makes it tick, and it's always been an integral part of how media works globally. So I want you to talk about sort of the landscape you see, because you just come on stage here and you told me I want there to be more DSPs. I want this category to be bigger and bigger and bigger.
Yeah. So let me just take 30 seconds, or maybe 60, to describe just where we've come from. So in the very first pitch deck that I had 9 years ago, I had in there a slide that said, eventually everything will be transacted programmatically, because it can be. Every single venture capitalist I presented that to stopped on that and said, are you sure? What about everything? What about this? What about that? What about that? They tried to say it's not going to happen. Programmatic's going to be much, much smaller. It's never, I heard this hundreds of times, it is never going to touch television. AT&T bought Time Warner for just under $100 billion. And the very first thing they did, which incidentally is exactly what I told my friend Brian Lesser to do, buy an SSP, buy sell-side technology, make it transacted all programmatically. Randall, the CEO of AT&T, got on stage 18 months ago and laid out a vision for the future. His vision was, I want to make cable a new experience. I want to make it so that the tyranny of the grid, which Matt alluded to yesterday, goes away. And everybody can have content on demand just like Netflix has provided. So I want cable, the traditional television, to look like that. And the way that I can do that is I develop an interface that looks like Netflix. I use 5G technology to make it so that I don't have to lay coaxial cable in every single attic in America. And then a third, I need programmatic advertising to make it so I show fewer ads and make them more relevant and then get more money for those ads.
Higher yields.
And if I, Randall, the CEO of AT&T, do that, then I can land grab in the TV industry. And if I then can combine that with the most premium content by buying Time Warner, which owns HBO and Turner, if I can get the most premium content, then I can do that. So he just bet $100 billion on that. And then we sold AppNexus for somewhere between 1.6 and $2 billion when people were saying programmatic isn't ever going to be a thing and it's never going to touch television. It's to date the most validating M&A of programmatic.
Yeah.
What happened in the last 24 hours?
But you going public as well is a validation.
Well, I mean, that's not M&A, and I certainly think that us being public and beating and raising 10 quarters in a row has underscored the validity of it, and the fact that Wall Street believes it, who's a group of skeptical people who are putting their money where their mouth is.
Can I ask a question?
It's definitely validating.
Why do you think
what happened in the last 24 hours is amazing for the industry, and it has underscored that everything we've done to date is a dress rehearsal for television, and AT&T is putting their money where their mouth is the same way Wall Street is.
All right, I'll ask about Wall Street in a minute, but the TV thing is really interesting, right? So we think that the entire media market in the world is about $600 billion, right? The TV market is probably half of that. Yep. And that is a huge opportunity. So when we talked about connected TV, there's still some skepticism, but the early signs are there of where we're going to go with this, because changing habits of the millennials and most people in this room, because I doubt that anybody who's watching linear TV. I watch no linear TV. I didn't. The World Cup, I've just watched one crap game. I'm trying to avoid the English games for all I can, like, you know. I can't fucking listen to them. No offense to the English in the room. Like, I literally do not want you to win the World Cup ever. So talk about that opportunity, really, because like it's very exciting. You've got companies like Roku who've gone public. You've got, you know, a lot of the big TV manufacturers now see the opportunity because they just see it as a box, right? It's a connection. So where do you see us as an industry, programmatic, to moving into that space?
Yeah. So let me just describe a little bit the evolution and then just where we're heading. So Netflix changed TV as much as any single company ever. And they did that by saying everything should be on demand. You know, they have managed to reinvent themselves a couple times, including like moving from the DVD mailing business, which was never their vision. Reed Hastings' vision was always to make content on demand. But he also got into the business of creating content. And what has happened is people have experienced on demand and they've said, this is so much better. Being able to watch it when I want, that is not a no-brainer. That's not a revelation. That's not hard to predict. People would rather not be a slave to the clock. That's not hard to understand. So when you get content on demand, everybody else is moving in that direction. So the U.S. market has evolved very differently than the way things have evolved here in Asia, and particularly in China, which is that in the U.S. we built around mostly Amazon and Netflix. And Amazon and Netflix said, we're going to make everything on demand, and they're going to force everybody else to change. Traditional TV companies initially said they're not going to, and Randall at AT&T changed the game when he said, I'm going to land grab, and I'm going to race to get there, and I'm going to look just like those others. And in the last 12 months, we've watched every major media company in the United States, and arguably in the UK with Sky, start fighting over assets and land grabbing so that they can adjust. And you see companies like Disney kick Jack Dorsey and Sheryl Sandberg off their board because they view them as competitors going forward. That is a massive shift in the way people have thought about things. But in the middle of all that, there's the consumer. And 70% of consumers sign up for cable in the United States, and 70% have Netflix. And when you add onto that Amazon Prime, which is one of the best reasons to have Amazon Prime, aside from free shipping and just all the amazing things that come with it. You know, Amazon as a company, every company in the world has to worry about them because they build phones, they'll build cars, they make diapers, baby wipes, they do everything. Everybody has to worry about them. But as a consumer, I fucking love them.
I agree. But they literally are the most dangerous company in the world.
Yeah.
Because they have the distribution, they have the data, they have the search data, and then they have their own line of products. So like if you're a CPG and you're selling like shitty hand wash, right, as a brand. By the way, I'm not slagging off CPG. I love hand wash. But if you're doing that, like Amazon can literally just look and see what's happening, right? Mine that data and then basically get their own product made and start selling it.
Yeah.
And to your point the other day, like if you're, I think it was Wendy told me about your Duracell, like batteries. So if you say to Amazon Alexa, I want batteries, they're going to give you like Amazon labeled batteries, not Duracell.
That's right.
So the whole world's changed around that. It's quite interesting.
It is fascinating. And I probably digressed when I talked about Amazon.
I know you put me in a whole different conference there. I've got that.
Yeah.
But
let me just finish the thought. So Amazon and Netflix changed the game, but what has happened is as people have paid their money to get on-demand Netflix, on-demand Amazon, as well as a cable bill, because both 70% of Americans are doing both. It's become super expensive for them. So when Hulu comes out and says, we will... Did I turn it off? No? Okay. We got like 6 of them, so...
That's an acapella.
Yeah, but as the content has become better, and we are in the golden age of television. Content has never been better than it is, but the average cable bill has almost doubled in the last 10 years. The number of the ad to content ratio is the worst it's ever been, which is I think part of the reason why you're complaining about the World Cup.
Yeah.
But
and also Ireland are not in the World Cup, so that's the other reason I don't give a shit about it.
But what this has meant is that when Hulu introduces a new product that says you can either take ads or not, nearly every consumer says, I'd rather see the ads because they are tapped out. So last year, we talked about 1,000% increase in connected TV. In our quarterly report, Q1 this year over Q1 last year, we were up 21x. That is not the way things typically grow. Typically, you go 10,000% growth, then 5,000, then 1,000, then 500, then 100, and then you start squabbling over 40, 30, 20% growth. We went from 1,000% growth to 21x the year after with much, much bigger numbers. That is a commentary on TV is here. So 2 years ago, people were saying, is it ever going to happen? It is happening now. So the fact that an ad-funded models are doing so well is something that I think is also, it's fueling the U.S. market to look a little bit more like China, which is all ad-funded. Meanwhile, in China, we have way too many ads in content, but all the premium content is funded by ads, and they're swimming in inventory, and the only solution is programmatic.
So do you think the programmatic, I mean, this is interesting. So you think programmatic is a panacea to A, raising yield for the content guys, and B, increasing the user experience, better user experience, because if I get served a 6-second ad, right, which is going to be the mobile state, 6-second ads are going to be a big thing, and they're already a big thing with YouTube, but like they're going to be bigger. The yield in that from a Fox or Disney or Comcast or whoever perspective is going to be higher, because A, you can use data from your clients, first party data, third party data, whatever, to have that sort of one-to-one experience, a personalization of that particular advertising. The yield's going to be heavier. But at the minute, like you say, like the ads are everywhere, right? I mean, you can't go watch a show in the US without seeing a fucking ad every 10 seconds. Like,
Yeah.
I mean, I can't even watch the American football. I mean, it's ridiculous.
Yeah.
Ad. Oh, stop. He gets sacked. Ad. Okay, he's offered into it. Oh, it's another ad. Okay. It's a halftime show sponsored by blah, 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 blah. So, is this about our industry sometimes gets hammered for what we do, but actually there's a theme here about making the user experience better.
Yeah. So I know that people like to pick on ad tech. I mean, I've seen this in Wall Street.
We love ad tech. Hands up here who loves ad tech. Yay! Speaking to converted. I love it. Woo! No brands here, obviously. I hear ad tech.
Everyone should. Everyone should. Consumers should. Because consumers don't necessarily love ads, but they love not paying for content.
Yeah.
And when they have to look at ads, they would rather there be fewer of them and be more relevant. We're all in that business. That is the business we're in.
Yeah.
We're in the business of introducing people to products that they're interested in. And that's something that advertising has not done well, especially in recent years, as the internet has made it possible to create almost unlimited inventory. So what we're all in the business of doing is creating a better experience. And if you love TV, and all of us should, TV is fucking amazing right now. It is the best content ever. But it is super hard to monetize. They're paying more per episode than ever. I mean, all of us hear the numbers. Game of Thrones, $20 million an episode, all that stuff where it's very difficult to fund. It is not possible for us to have the amazing experience that all of us are having if we don't have great ads. We are the engine that fuels media, all of us. And if we
keeping the internet free since 1993. Yeah. So do you think that Netflix and these other channels which are subscription based will have to gravitate towards an ad funded model, because it eventually Wall Street will say, look, I'm tired of these losses. I want to see my money. Show me the money.
So David Wells, the CFO of Netflix, is on my board.
Okay.
And he
conflict of interest.
Yeah, no.
Let's not talk about them.
No.
Does he talk to you over beers?
All the time. And when he joined the board, I said, I just want to be super clear. I believe it is inevitable that you have to show ads on Netflix. I think the day will come that you have to do it. And I just hope you don't mind that I've been saying that publicly. I'm going to continue to say that, and I just don't want that to be some source of conflict. I think we both have to be okay with that. And he's fine with it. I get Reed Hastings' aversion to ads. I get why he doesn't want to, and especially it's partly because all of us need to get better at our jobs. If we make certain that we can say to Netflix, there will only be 2 ads, we will pay a lot for them, and they will be super relevant to the user. I think it's way easier if you're a C-level at Netflix to then say, hey, I can create more content and give consumers an option that gives them lots of pay ranges, which, by the way, Netflix has done an amazing job of doing that very thing, where they used to have one price point. Now they have a very wide range. It makes total sense that at some point they would introduce that. But if I'm them, I would do exactly the same thing they have been doing, which is ride the wave as long as you can to finance premium content. They've had to raise prices a lot in the last 12 months, multiple times. And so at some point, you're going to tap out the consumer, and you're going to have to find another way to monetize. I think that's ads. But we can accelerate that and accelerate the move of premium content into the programmatic ecosystem if we all just get better at our jobs. I really think that's the only thing we have to do.
So, okay, shifting on to something else, because this is actually one of the key things of this. I mean, the success of the duopoly, I said it, okay, that's the first time today, probably won't be the last. The success of the duopoly is about this persistent sort of ID they have, right? The ability to target at the granular level, right? Cross device, right? Look, buying on Facebook is piss easy, right? It's easy. That's why lots of agencies do it, because it's immediately cross device. You don't have to worry about, a mobile DSP, a desktop DSP, what data you use, where you use it. It's just Facebook, right? It's just easy, right? You don't have to worry about Apple blocking ads or whatever shit you've got to deal with. It's just easy process. Can you talk a little bit about the sort of ID initiative that you're doing with the other ad tech industry? Because this is really important, because this ID actually makes us relevant in relation to Google and Facebook. I mean, the acquisition by ATT of AppNexus is important, but actually for independent ad tech, independent ID is really interesting. I just want to talk about that, because this is the key for us to open up that $250 billion market, right?
Yeah. So let me first talk about Google and Facebook, and this is going to just take a minute to explain.
They make lots of money.
Yeah. So, last year we kept track of how many meetings me and our IR guy or VP of IR, not IR guy, but how many meetings we took. And between us, we took 568 meetings with Wall Street. I was asked about Facebook and Google at least 568 times. Google and Facebook have both created amazing businesses. They're two of the most successful companies in the history of capitalism. They have done amazing things, but Wall Street and advertisers have credited them with the wrong things. They deserve credit for making it easy, as you pointed out. We let them grade their own homework. They control the attribution, and part of that's because of the IDs that they have. But it's mostly because they control all reporting, and they're not accountable to somebody else because they are the publisher. But at their core, and this is the reason why I don't view them as a competitor per se, which is that they monetize Facebook.com and Google.com. We monetize the rest of the internet. And
they're
by
media
we,
companies.
I mean all of us.
They're media companies.
They are media companies.
Yeah.
They are new media companies. And they're in the business of monetizing. Facebook.com is, 90-something% of the revenue. Google.com is just under 90%. One of the massive advantages they've had is their ID footprint, which let's just say that, and it's worth going through this exercise for just a second. Google has 90% of the commercial internet cookied. They have an ID on that in 90% of the U.S. market. We'll just say U.S. Facebook also has 90%. We have 80% of the commercial internet covered in the U.S. because we look at 9 million ads a second, and because the majority of the S&P 500 spent at least $1 million with us each last year. So by representing the majority of the S&P 500, we've made it so that we buy so many ads on so much of the independent internet that we have 80% of the internet covered. If you use it as an example, some of the largest SSPs in the world, like Index and OpenX, who's here today and a sponsor, they have something like 40% coverage, because there's not an SSP in the world that has more than 1 million QPS, especially unique QPS. And so while we look at 9 million, they have less than 1 million. And it's just because we plug into 100 SSPs, not just one, and they all divide up that 9 million. But if somebody wants to spend $1,000 in remessaging, what you have to do is you have to have a common understanding of the user. So we call it ABC, they call it 123 at OpenX. We have to ping them and say, hey, who's ABC? They say, well, your ABCs are 123, and we pass it back and forth so we have a common understanding of the user. That means both of us have to understand the user in order to monetize that with remessaging. So if you want to spend $1,000, if we use simple math to say 80% and 40% means that we could spend 32% of the prospective audience will have remessaging data on. So just hypothetically, we'll spend $320. If you give me the same $1,000 and say remessage on Google's AdX, I'll take 90% times 80% and spend $720. All other things were equal. That in and of itself has been a massive advantage. And one of the big problems that has happened in ad tech is whenever somebody's has created a bigger cookie footprint, we've all hoarded it and said, no, this is mine. So Google has 90 units of measurement, and somebody else has 3, and they're like, well, I got my 3. I worked hard for that 3. I'm not sharing it with anybody. So we made the biggest, boldest strategic move I think we've made in our company history last year, which is we said we're giving it away. We're giving away our cookie footprint. And these are just anonymous IDs. We're not giving away data. We're giving away a random number that's assigned to users so that we have a common understanding of the user. And you may say, whoa, that seems risky from a privacy perspective. Just to be clear, this is the way mobile phones work. That's what your mobile ID is. This is the way televisions, some of them work. This is the way all of them should work. So we're creating an ID that we can all have in common. So this has a huge impact on this region. The companies that will benefit most from this are companies that are smaller, independent ad tech companies. And if you're regional and by any nature, if you're a company like IOTA, like I was talking to Kevin Tan about this yesterday, who's now in Berlin. If you take their cookie coverage, which I would estimate is something like 20%, at least on a global basis, and then you take our 70 or 80% in this region, instead of anding those together where both cookies have to be present, now you can OR them. So 80 becomes better than 80 because we take the incremental 20 that they have and we get something closer to where Google and Facebook operate.
And this is important because if as soon as TV drops, it means that as an industry we can compete in that space because of this this collective.
And it's the only way for us to make it so that we are respecting users' multiple devices. So meaning if we don't do that, we're going to harass them 97 times on this device, and then we're going to do it again on this one. And we are all going to mistakenly think it's the same person. So without a collective effort for us all to work together, it doesn't get there. So I believe we've created the largest independent cookie footprint in the history of ad tech, and we're giving it away to all of you. So if you are on the inventory side, talk to the inventory side, the trade desk. If you're on the data side, talk to them. Even if you're on the buy side, like, because it is impossible for us to do this and not benefit companies like DataZoo or MediaMath. We've worked closely with them to do it because it's stupid. And some people have said, why would you do that? You worked so hard to compete with them. You got ahead and then you gave them one of the advantages. And my response to that is the incremental dollars, like if you look at where they all went, like independent ad tech got this much and Google and Facebook got this much because of easy and because of attribution and because of IDs. And so we can fix all of that if we just work together on IDs. So we're giving it away. We've already seen massive increases with exchanges like Index. We're working hard with companies like OpenX. But I believe in the next year, the seeing 97 pixel syncs on the bottom of a page will be over because of companies like us giving it away.
So okay, that's great. Thank you, Jeff. Again, you've saved the industry once again, superstar. In fairness, though, you're doing a great job. So where do you think ad tech goes from here? I mean, you know, I just think that for me, it's just I hear such negative noises all the time. I read, like, I'm not particularly picking on anybody in particular, but like, Digiday went to Cannes, right? And wrote the most depressing fucking article about that event. And I was like going, particularly ad tech, they're always down in ad tech. And I'm going, your entire business is funded by ad tech. You mean like they pay the bills, right? Why do you think that there's this innate negativity around our industry? I fucking love ad tech. I mean, like, you know, our entire business is built on this ecosystem, and I can't understand why. You know, like, you know, you look at AppNexus, right? And Brian O'Kelly's raised 340. The man's been hammered in the press for the last 10 years, right, for what he does. But who has built a company or an infrastructure like DoubleClick, right? The man has built an enterprise ad server and then sold the fucking AT&T. I mean, that's amazing. Seriously, like, that is amazing. Like, we're taking on Google. Google have more money. Have you been to Google's fucking canteen? They have free food. Like, it's like a gilded cage. They pay people shitloads of money. They get all the best people, and they eat fucking free food all day. I mean, Facebook's is a bit better. Twitter's is terrible, actually. They've got a terrible canteen, actually. Fairness. The one in London's horrendous. Sorry, Mo Pub, I apologise, but that's not a reflection of how good your technology, because it's awesome. But do you think that we do ourselves a disservice in the sense that we are super negative? And I think that your point about, do you think that we don't do a good enough job articulating the importance of what we do, right? Because every time you hear, oh, ad tech takes and ad tech tax and all this other bullshit, I mean, do you think that we don't do enough to say to brands, how do you think your ads get delivered, right? How do you think this targeting works, right? How do you think you get customers? We fucking do that, you know?
Yeah,
Is that what I should say?
uh,
By the way, I'll never be invited to any ADA ever. Don't worry about it. Or a campaign or anything else.
I think there have been too many ad tech companies who have tried to hide behind the complexity and esoteric nature of our business or industry to basically hide their margin or extract more value than they add. And what happens over time, in part because of transparency, in part because of open markets, is those companies go away. And I think especially the last couple of years, there have been a lot of those companies go away. You don't see the Lumascape on display in every fucking presentation like you used to. And the reason why is because we've mostly taken logos off of it. And many people have said that's a tragedy. And there have been real people who have lost jobs or had to transition jobs. But here's the big picture. A bad company with a bad business model going away is not a tragedy. And
it's natural attrition as well. We're in a startup world as well.
And before you say, well, that's really callous because people lost their jobs, I just said this is going to be $1 trillion industry and nobody understands what the fuck we do. So all those people can go to businesses where there are real business models and actually contribute. And so we're in an era of execution. We are in an era where companies are growing up. We've been saying forever our industry needs to grow up. We need to become professionals instead of just hacks. If you look at the number of ad networks that we had in 2006, 7, 8, most of those were business models that could never survive long term. I think even then most of us knew it. But today we have business models that have to survive, and you have to add more value than you extract. And that value exchange is at the core of what GDPR is. It's the core of really every discussion we're having in advertising today. We were just talking about it in TV, like where people are willing to, instead of paying a subscription, they're willing to see ads. That evolution and that discussion between consumers about the quid pro quo is really healthy. We're having healthier discussions about advertising than we ever have before. We are in the golden age of advertising, golden age of television. It has never been better. But because we took a few logos off a slide, people think bad things are happening. And some business models are under pressure and people need to change and evolve. But that's always been true. Yeah. It's just happening in a way that's difficult to understand. But we've got our eye off the ball if we let that turn negative.
And just for the record, we've got to finish up. I could talk to you all day. You know, honestly, I could just make the show about you.
Yeah.
But there's already been several billion-dollar exits as well. I got an email from Business Insider this morning going, Kieran, would you like to quote in this article about AppNexus? It's been a really dark time for ad tech. I'm going, where the fuck have you been in? A dark time. In the last 4 years, there's been like billions and billions of dollars of exits. And you're right. Look, ad networks, by the way, I love ad networks. Ad networks are the greatest model that ever came into the internet. It's just a fantastic model. If you do it right, it's amazing. But you're right. There was a lot of people just taking crazy arbitrage. And I see it already. We're just launching the gaming space, and some of these ad networks are making shit ton of money. And I'm going, where do you think all this margin's coming from? Like, so there's definitely a degree of responsibility, but there's the excitement around the space should be greater because there's a fabulous opportunity.
There's never been more opportunity in media than there is today. And I mean, to just abstract it just a little bit, and I mean, I talk to our team about this a lot. We're powering the engine that powers media. And media and those ads that we're running are for products that are really impacting people's lives. And when we talk about a growth in middle class, that means that people in Indonesia and in China are going to be choosing laundry detergent for the first time in their lives. They're going to buy a washing machine for the first time in their lives. Like this move to middle class is changing people's lives, and the people in this room are fueling the way that gets changed. And helping companies that have been around for 100 years make it possible to introduce their products to other people, to me, that's amazing. I really believe what we all do is amazing.
Right, I've been told here to wrap it up. So,
All
so Jeff is opening a special clinic here in Singapore. Anybody who's depressed about ad tech, Jeff has got available every Wednesday morning for a couch session, right? So this man's amazing. Ladies and gentlemen, round of applause for Jeff Green.
Thank you so much.